With all this uncertainty that we talk about in markets, what about this idea of a recession in 2019? A different view from what you heard from Kevin Hassett came from Liz Ann Saunders, chief investment strategist at Charles Schwab. She was interviewed by our own Jerry Baker here on Friday. Listen.
There's a 100% chance we're going to get another recession.
Yes,
in the next year, I do think trade holds the key. I think it's the key to the span, right? I think the key to the length of runway between now and the next recession to a large degree does relate to trade, and hopefully we'll have some answer to that in the next few months.
All right, we're joined now by the president of the American Action Forum, Douglas Holtz-Eakin. Now, just to be clear, Liz Ann is not saying there's a 100% chance of recession next year to, Kevin Hassett's zero. She's saying, obviously, as you know, Doug, we're going to get another recession at some point. There is a 100% chance of that, but the timing is based on trade. What's your take?
I think there's a lot of truth to the fact that trade is crucial to the near-term path of the economy. We've seen the toll that the trade tactics have taken over the past year. We've seen CEO confidence just came out this morning. It's down to levels not seen since before the last presidential election. A big part of that is ratcheting back capital expansion plans. All of that is bad news for the growth rate of the economy, but I don't think of that as recession risk. That's really taking the upside away. To get a recession, you have to have the household sector go south. And the guest you just had on pointed out the strength in consumer spending. We'd have to actually see household spending drop to something like -1% to get a recession. It's been growing at 3%. That's a big swing, and there's nothing out there that's going to drive the sector south that way.
Oh, it's interesting because I know you're not a guy that's going to come on, Doug, with us and necessarily pick stocks. But as you look at the equity market reaction, or really
you're right about that.
Right. Well, me neither, by the way. If you're looking at the equity market, but also other markets, you can look at the bond market. You can especially look at high yield for the last few weeks. Is there an overreaction in your judgment in financial markets to what's happening in the economy, what the economic outlook is?
I think two things are going on. One, it is traditional for financial markets to overreact. They swing more widely than does the real economy. You don't see the economy bouncing around the way you do equity markets, and that's because equity markets are filtering good and bad news all the time and trying to decide things about it. That's its function. The second thing is, I think there's a lot to be said for the Fed being behind the curve, and that by keeping rates low for a long time, we got some inflation. But it wasn't traditional consumer price inflation. It was asset inflation. And so a lot of what you're seeing now is the Fed getting back to normal and asset pricing getting back to normal. It was ahead of itself. That's actually good news in the bigger picture. Living through it's not fun, but over the long term, that'll serve the U.S. well.
So they put themselves kind of in a tough spot by being behind the curve for that long? So what do they do say Wednesday, or more importantly, I guess, what do they say?
I think they move Wednesday regardless. What they say, I think, is something that's not going to make anyone very happy. They're going to say, oh, this is all data dependent. We're going to do the right thing, I promise you. And, we're close to normal, where that means a 100 basis point range. And people will just scratch their heads.
Yeah,
I think it's going to be a tough week.
Where's neutral? What's that? Yeah, no, the whole thing. So
we'll get the whole thing.
We look forward to that. Yeah, you make your own interpretation. It's like one of these choose your own adventure novels. Go ahead, Doug.
You could go back to Charlie Gasparino and just have a Fed drinking game. I mean, that's what it's going to be like.
Well, that's Gasparino's another story altogether. But, it was half full. It's always half full with him. Let me ask you one more question, Doug, on a different subject, if I might, which is the healthcare ruling. What did you make of that? There's a note that came out, I thought it was interesting, from S&P today, S&P Global Ratings, that after this judge ruled in Texas on Obamacare, ruled it unconstitutional. Now it'll go through the appeals process, says that the decision poses a threat to the credit quality of some states, as well as hospitals and insurance companies, because, as the logic from S&P goes, the states that expanded Medicaid could lose billions in federal money. Then maybe they try to, keep people insured, and they're on the hook for a lot of money themselves. What do you make of this from a financial perspective?
There's certainly a grain of truth in that. It has always been a risk to do the Medicaid expansion. One fear was that the federal government would ultimately just renege, right? The budget deficit is really bad, and they might try to fix it at the expense of the states, and they'd be left trying to come up with that money. This is an extreme version of that, where it just goes away entirely because of a judicial ruling. Now, the good news is there's a runway to that. They're not actually putting in a stay or injunction. The law will continue to operate, but as appeals move through the courts, it's something to keep an eye on.
And we see those stocks, the health insurance companies, down for the most part today. Doug, thanks. Always good to talk to you.